India's elderly population is set to rise by a whopping 41% by 2031. That's 19.4 crore Indian people. Soon, you might be one of them. I'm sure you have many questions about pension and all that is going around it. To discuss all of this and much more, we have with us today Dr. Deepak Mohanty, Chairman, PFRDA. So do you think the national pension system in its current state and form is well equipped enough to deal with the constantly growing population of the aged and the elderlies in India? And in that vein, to start early off, do you think that NPS should be made mandatory for everybody instead of just being the voluntary subscription scheme that it is right now?
So, are we really prepared for that? I would think not really, but it is not too late. Now is the time for the preparation, because given the structure of our employment, see 90% of our workforce are in informal sector or people are self-employed. So there is no statutory access of pension. So people who are there outside the formal employment, so they would have to make arrangement for themselves. In that way, that we have two pension schemes now, the Atal Pension Yojana, which is again aimed at low income deprived sections, and also we have NPS. And NPS, as you know, it is both for the government and also for the non-government employees and also the common person, because the corporates can come in on the private side, and even the common people, anybody wants can really join, and there is not much difference in terms of the features in this scheme. So, but the numbers are low, because if you look at the NPS on the private sector side, so as of now we have only 48 lakh accounts on that side. So that is low, because of course it is growing quite significantly, but that is low because on the corporate side there are a lot of corporates have come in, but but the take up rate with the employees are less, because normally they go for the default option, which is the provident fund, and all citizens model for the common people which is there, we need to spread that. There also we see penetration is less, at least among the people who can really afford. For example, professionals, self-employed, small business, they can really afford. But so then our objective would be to expand this universe. And your other question, that do we make it mandatory? Obviously, the structure of employment is such we cannot make it mandatory, because if you are in the formal sector, there is a mandatory social security benefit they would have to give, a post-retirement benefit. But if you are in the informal sector, you are left to yourself. So in that, our effort would be to give more knowledge, that people are made more aware, and then we make the schemes are flexible, and also the ease of access that we improve. So in that way, that we expect more and more people will come into this fold.
So there's a lot of media discourse and narrative around the corporate and the government segment of the NPS model. However, the one segment that we don't talk about enough is the all citizen segment, which is far more encompassing and far more crucial for citizens of India. And when I talk about them, I mean transgenders, gig workers, women who might not traditionally be a part of the Indian employment structure. So do you think that there should be more efforts, more concerted pushes towards promoting the all citizen model, given that the growth in that model has been pretty stagnant for the past 3-4 years?
See, the way that you will see, there is no significant difference between the corporate or government scheme and all citizens model scheme. That is an advantage, because earlier people who had pension, they were only in government, but that privilege can also be accessed by everybody. So that's in the in the all citizens model. And so now, because the take up rate is not that high, because partly it could be because of the awareness. So, we will expand that awareness, and also we are also expanding the intermediary base, enabling regional rural banks that they can also do NPS, and similarly cooperative banks. So, at least the bigger cooperative banks are there. So, why that clientele should be deprived of a pension? So, we are trying to induce them to offer also NPS, and then we have facilitated the agent model, that the POPs, point of presence, for example bank branches, they can also use their agents to source NPS. So, this is the way that we are facilitating this process for the all citizens model. NPS side, what we have seen, that gender inclusion is not that high. Female participation in NPS would be around 30% of the total universe. Partly that stems from the fact that our employment structure is such that more men are in the organized labor force. But then you have spouse, then why don't you get a pension for your spouse? And this notion that the head of family has one pension or post retirement scheme, so that is a nirvana for everybody, but that is not true. And given the lifestyle, given the way things are changing, and the family structure, families are getting more atomized. So, the comfort or insurance of a joint family system is waning gradually. So, as you go forward, this is the thing that is going to intensify.
So, some of the best pension systems in the world of Nordic countries, mainly like Iceland, Denmark, they are built on a three-pronged pension system, the main one of which is a universal corpus, a universal overarching corpus, which provides some level of guaranteed social security to the elderlies in the country. In stark contrast, India sees a very bifurcated and a very diverse pension universe, in the sense that we have Atal Pension Yojana running separately, we have EPFO pensions running separately, there are state pensions that are also doled out. Do you think that the idea of a universal corpus of pension in India is feasible, is something that can be implemented, and that the entire pension system needs a very, very fresh understanding and overhaul to cater to the needs of the population going ahead?
Despite a person taking or having an access to multiple pension schemes, but you say that is not enough, because one of the key discourse even in advanced countries is old age poverty. That is the kind of a situation. Then you can imagine our condition in that situation. The multiple pensions, and you mentioned there are different entities offering pension. But that universe is still small, because partly it stems from the statutory requirement that you go to EPFO if you are a worker with a particular income threshold. Though beyond that income threshold, it is open, because one can go to the provident fund or go for a pension, in the sense NPS. But what corporates have done, that they have made it optional. But there is always an inertia, because once it comes about pension, people really switch off, and youngsters like you will immediately switch off. Nobody wants to get old and think that they would require pension. Sure. And then once you prevaricate on that, you postpone it. So then you go with the default option. Anyway, employer would have to make his or her contribution. So one is staying on the provident fund. So I would say, even if one has a provident fund, but there is a need for taking a pension is on the side also, that you may be employer given provident fund system, but at the same time please do have NPS.
So amidst the discussion of the MAR scheme, the minimum assured return scheme that the PFRDA is set to roll out, you have mentioned in a lot of media interviews previously that the pension corpus system in India, the capitalization of it is wafer thin. So when we talk about providing a minimum assured returns on your pension schemes to the people, how do you balance bringing in more capital to the corpus, which means more cost, and balancing out with an attractive return rate that is competitive with the rest of the market instruments? In that vein, sir, I also want to ask that pension funds, these investments are for the long haul. And given that India's bond market is not that deep, it's pretty nascent right now, do you find enough viable opportunities in India to invest? And what do you think about having a global market open to India's pension funds to generate more returns and have more international opportunities, which is the case with a lot of pension funds in countries like Canada and Denmark?
Guaranteed return, that is in a statute also, that we really would have to offer a guaranteed scheme. And some people, because now if you see that NPS, it's a market driven scheme. True. But people don't realize it's a long term scheme. True. If you are staying in the scheme over the market cycles, so more or less it becomes assured return. Because now our equity scheme since inception is giving an annual return of over 12%. And if you look at the equity scheme, of course, this year has been quite good. It's an annual return of 25%. If you take last 3 years, equity scheme on an annual basis giving a return of 25%. So this is where it is. Let's talk about the government scheme, which is a mix of equity and debt, and largely debt. So that is also giving annual return of 9.5%. And state government is giving annual return of 9.3%. I am saying it is over a medium to long term. But obviously, if you look at year to year fluctuations, there could be volatility. But if one has to really give a guaranteed return, guarantee has a cost. So in that sense that we are seeing, and who will give the guarantee, because this is not a government scheme. So because Atal Pension Yojana guarantee is given by the government. So if there is a gap is funded by the government. So here it is not a, it is the pension fund would have to do. So they would have to have the wherewithal really to manage that process. So as you said, because the pension funds are thinly capitalized, that is how the returns are also quite high, because it's a low cost operation and it is a pass through vehicle. So if you have to ask them to do kind of a guarantee, so obviously they have to bring in more capital. The solvency capital they would have to bring in, which has a cost. And then we have to see from a systemic stability point of view, because then contagion doesn't flow from guaranteed scheme to the existing scheme, which is there, which is thinly capitalized. And then we have to see, after meeting this cost, the return which is there. So that should be also attractive and commensurate. People would compare the rates available in the market. So we have to see that. The statute doesn't allow us to go and invest abroad.
Okay. Would you want to,
No. I'm coming to that.
Right.
So then the issue would be that you mentioned about the other advanced country, pension funds investing here, but they have lot of money. True. That if you see that in the OECD countries, that the pension corpus is around 90% of GDP. Certain countries which is even close to 200% of GDP. Right. Compared to that, if you look at the pension corpus here, it is, I am not talking of NPS and APY, the overall including EPFO and insurance companies, what they are giving, they have also pension schemes. All that put together would be 16.5% of GDP. So it is not much amount. And if you come to NPS, you say that it is about 3.5% of GDP. So we are about 9.65 lakh crore. That's the corpus, of course, absolutely sizable. And then once we look for investment opportunities, we get good investment opportunities here, because in the bond market, both when in the bond markets, again the government securities and the corporate bond market, and then your new class of investment options are also coming out. So, for example, for infrastructure, alternate investment vehicles, and then you have green bonds. So, opportunity is there. So, I would not say that the opportunity is not there and we are not finding papers, but we are finding papers despite the fact that the pension funds can invest only highly rated paper. Over 99% of investment are in AAA or AA plus bonds. So, from the risk management perspective also, this is also quite good. That you would see, because the concern comes that there is not so much of trading, liquidity is not there.
Right.
So, bond market does not have that kind of a depth. Right. But pension funds being long term players, they can always buy and hold. But buying and holding has its risk, because you see, are they building up risk in their book by not just buying and holding? Right. But mind you, it is mark to market. Okay. So NPS is such a good scheme that what you see, that you get, because it is mark to market on a daily basis. If you bring in your contribution by 9:30 in the morning, it is same day by evening you get the net asset value of your corpus. So, it is that good. So, risk is not hidden. That is how that we are managing with a thin capital base of the banking system. So, as of now, liquidity is not a big issue, because the pension funds are long term vehicles.
So, PFRDA recently announced that it plans to introduce the systematic withdrawal plan feature in the NPS system by September 2023. How will this impact the current structure where there are annuities present, and how will the introduction of a systematic withdrawal plan impact the uptake of annuities within the NPS?
Then coming to your question that you just asked on the systematic withdrawal plan, because as I mentioned to you earlier, that if you see the rate of return is quite good in the pension, in the NPS corpus. Many of them who have come because of rate of return, but when they have to exit and annuitize, right, they see the annuity rates are relatively lower. So, why should you take annuity? Or else they have to do a lump sum withdrawal. Then say, if I take lump sum withdrawal, where do you put that money? That those issues come up. But we have facilitated now that one can. You talked about the population, young population, we are most populous country, and the longevity is also increasing. True. So, what we have done, that one can even join a pension scheme till 70 years. So, after 60, lot of people retire at 60, because that is the kind of in the formal sector largely the retirement age. Then people retire with a lot of money, so they don't know what to do with that money, where to put that money. So, NPS gives us a vehicle, putting that money, keeping those things in view, that we have expanded that, and one can defer pension till 75. So, that is the kind of a good option that gives. So, what we have said, that in the systematic withdrawal plan, that 60% they can withdraw over a period of time, depending on the requirement, on a installment of monthly, quarterly or annual. So, that becomes like a pension regular flow which is coming. So, people stay in the NPS system, still they draw some kind of a monthly income. Right. So, that becomes helpful, and you can defer your annuity. Toward the end you can take annuity. So, all that flexibility you have brought in, given that in a statute it is not permitted that you go for 100% alternate pension products like the way systematic withdrawal plan is there. At the max, it could be 60%. Of course, we have requested the government because if you may know that we have proposal for amending the PFRDA statute. So in that we have requested that we should be also in a position to offer alternate investment opportunities and pension. So if that comes, the very fact that another alternative will come, so that will bring in competition in the market.
Yes.
So then you would say one could really get, the consumer would be the ultimate beneficiary. They would say that on the annuity side there could be better rate, and they will have a choice. Somebody is more comforted going for annuity, they can go, or somebody wants to stay here, depending on the requirement, they can stay with the pension fund.
So this is more of an operational question with the whole OPS NPS debate going on. I wanted to understand that hypothetically, say a man works in the new pension, under the new pension system, and amasses a corpus of 10 lakh rupees during his service of 15 years. Now he switches back to the old pension scheme and amasses a corpus of another 15 lakhs during his service of 15 years there. By what mechanism does the PFRDA intend to return the original corpus, the former corpus that this person had generated during his earlier tenure? A, how will it be returned back to the person? B, who will be accountable for the returns generated on this corpus, because this has been invested in the stock market and there have been returns thereof. And B, when this person is eligible for NPS, when he turns 60, 65, will he be given the option of 2 annuities? How will this entire system, how will this fund adjustment between the old system and the new system pan out? I'd really love to know your views on this.
Simpler answer to your complex question. We are not at it now because that situation has not arisen. So having said that, because this is a post-retirement scheme and old age income security scheme, so this is run on the basis of subscriber interest, in subscribers' interest. So that is how it is working. And the state government came up because they subscribed to the our statute and the regulation set out on that basis. So there is no forcing state government to come in. So they are on their own volition. They came into the scheme, and the returns. So what I just said are quite good in that process. So irrespective of contribution, no contribution, whatever accumulated corpus is there, that is invested by pension fund. So subscriber is getting a return. Then how do you go out of the scheme? So that you have come under a particular scheme, it has certain requirement, it has certain stipulations, in what condition one can really go out and what manner one can really go out. So that would be applicable to the subscriber. But how they manage their other part of pension and all that, so I don't think I am competent to comment on that, or I know much about it. He has access to pension or superannuation benefit, can also have an NPS. It becomes it's a private NPS. Even after retirement, a government employee can still stay in the NPS. So it will become a private NPS, So that is another good feature of the NPS, that it is portable. Right. So many times what youngsters think that if they are going for a pension, they are stuck with that, because they keep changing employment very frequently, and then keep in and out of employment. Suppose you are on employment and then you think that you will do some studies or do something on your own and then go back. So but here NPS is flexible. You can same NPS, the PRAN number which is for your employer-employee kind of a corporate NPS, can become your personal NPS. Then again you join another corporate, the same can become also corporate, ported into a corporate NPS. The scheme is so flexible.
So the fact of the matter right now is that India is dealing with a bifurcated pension universe. One is where 6 to 7 states want to go back to the old pension scheme, and then the rest of them are opting for a newer version of it. And how do you as a regulator and somebody who has a significant say in this matter, view the idea of guaranteed insurance for everybody in the country. Do you think it is feasible? Do you think if these 6-7 states are replicating this model, it can be made tenable for the entire country? And what are your views on implementing guaranteed pension as a regulator?
No, guaranteed, for example, where the government also plays a part and gives guarantee, that we have APY.
Right.
So Atal Pension Yojana. It's a government can only guarantee it. But if you have market driven system, guarantees are very few and far between. Because it has a cost, there's a lot of uncertainty. And in current day and age, that kind of a thing is not there. And those who are financially savvy or technical people, they would understand that the cost of guaranteed scheme or the return consequently would be relatively lower than the market driven scheme. But having said that you would see there are a lot of risk. How do you choose a market driven scheme? So here what we have done, some choices we have made as a regulator. Not many people are aware of that. Suppose one is getting confused, we have given mind boggling number of choice. So it is again unfair to the customer that we are giving them so much of choice. So I was told that is also a dampener. People go and then pull back that I have to make these choices. So I will do it another day, and that another day may not come. So this is how it is working. But then we have to give the knowledge that we have life cycle funds. So as you age, so automatically we have a E scheme, which is equity dominated scheme. We have a C scheme, means is a corporate security dominated scheme, means corporate bond dominated scheme, and we have a G scheme, that is a government security scheme. So and there are auto choice, life cycle choices are there. As people age, the equity components are automatically reduced and the debt component expanded, because your risk tolerance and then staying with the market cycle becomes difficult. So one could choose those kind of schemes. We are not able to decide, that somebody else has decided for you, and then go for that kind of a thing. And just for a pure guarantee over a long term period, so I don't think it's a tenable option, or it's a good idea, because then it builds up a lot of risk. As I said, okay, one is unhappy that my NAV has come down suddenly because the market has moved.
Right.
But it changes, fluctuates. But then it's a transparent system. There are no hidden shocks in that whole process. But if you give guarantee, then a lot of other distortions come into the scheme. So having said that, there is merit in guarantee, because some people prefer certainty, because it may be return may be relatively low, but I am happy with that thing, because I know what I am going to get. So that's why the scheme we are going to devise, we are saying it is minimum assured scheme. So it is not such a guarantee scheme which would be unsustainable. So no, one would be of course the ease of access, I would say, more of a digital process, to ease that process even further. That's what we will do, including the KYC and other things. So that we would have to do. Second thing, I am saying the dissemination of knowledge. That would be the second thing that people understand. And third would be to have alternate pension instruments. So that will also bring in lot of innovations, and lot of schemes could really come, and would give better customer choice. So that would be another one that we would be aiming at.
Thank you so much, sir. Well, that's it from our end. I hope you got the answers that you were looking for. For more such content on pension and everything personal finance, keep watching Money9.